Hello everybody, welcome to your weekend edition. Happy freaking Friday. Cheers. I'll tell you about my trade. Today was not a good day for me. A little bit. I hate losing on a Friday. I could win every other day of the week, but you lose on a Friday, it always makes it bad. So I'll tell you about that as we progress. Today we're going for a little bit of, what am I doing today? High West. We're going a little Prairie Bourbon over here. So cheers everybody. Glad to see we got some people who watch the show all the time, but usually don't get to make it live. Landis, good to see you, my friend from the Southern Hemisphere. We got Tracy Bella as well as Ron S. So good to have you guys here live. Boss Poopa, I apologize that you can't have any frosty beverages, so I will take a nice cold sip for you today. Ooh, a good one too. Let's go. We got Thomasina as well. Good luck on your Zoom call, Thomasina. I know you have your choice, but Zoom call won today. And Shadow, good to have you with us. Katoot, we've got more Southern Hemisphere folks joining us. All right. I have a lot of stuff that I want to talk about today. God, I'm all across the board with regards to discussion topics, and I have a few of your listener questions I will get to as well. I'm going to start things off. Let's start off with the donkey of the day, shall we? I haven't done a donkey of the day for quite some time, so let's let the donkey make a sound. All right, who's the donkey of the day? I don't normally do these because sometimes it will gather, let's just say, some issues from some people with regards to me going after certain people. And today I'm going after somebody that's probably really stupid of me to go after, but it just reeks of colossal. Is my mic's working? Yeah, I'm working. Okay. It's going after somebody that you really shouldn't go after. And I'm going to do it anyway because it just speaks of the volumes of how inept and how stupid this government agency is. That agency is the Security and Exchange Commission. Now, of course, they serve a purpose, right? The SEC is there to ensure that investors don't get caught up in scams, which if you're in the crypto world, it's riddled with scams. Do your due diligence, do some research. But it's also there to protect us and to make sure that people who have information or access to information don't do anything illegal with it. Now, you guys might remember a company called Long Blockchain. Back in 2017, they were Long Island iced tea company, decided just to change their name to Long Blockchain. Very clever move. I saw this happen multiple times in the dot-com bubble. Those companies shot up 5-10-fold as it did here. So let me, I don't even know the ticker symbol for this dang company because I don't care about this company whatsoever. But let's just see if I can bring up Long Blockchain so you guys can see what happened here. Let's go Long. I think it's still, I hope it's still around. Stocks, and where's Long Blockchain? Do I not have it? I don't remember the ticker symbol. Let's go, let's see if it's Long Blockchain. There's Riot Blockchain. Heck, maybe they just decided to rip that thing back down. Anyway, it shot up a great multiplier, right? It was a huge jump to the upside. Now, the reason I'm calling the SEC the donkey of the day is that happened in 2017, and today the SEC decided to go after them for insider trading. I'm talking 4 years it took you to figure out that somebody did insider trading. I can look at any price chart and show you if there's insider trading with a good degree of accuracy. It's mind-boggling that they don't catch this more often. Now, of course, shame on the people of Long Blockchain for getting caught. It's fairly easy to do things so that you don't get caught. But here is an example of a couple of insiders making a few $1 million off of Long Blockchain, and then the regulatory agency taking over 4 years to figure it out and go after them. Yet, you could go look at Mr. Pelosi, Paul Pelosi, right? That was an email that came in asking me to talk about that, who's making millions of dollars off of information that, he's technically not supposed to have. It's funny, same thing happened with Visa with the Pelosi's. It's not just the Pelosi's I'm going after. It's all government employees. Anybody who's a politician has access to information and they can profit from it. Yet we're going after these 3 guys that did some insider trading on Long Blockchain and got rich. Go after the corporations. Go after the big guys. SEC, you are officially my donkey of the day. Sometimes I think you do good things. Other times I think you've got to be the dumbest organization on the planet. You're embarrassing yourself, so just shut up and quit doing what you're doing. Okay, done. My rant's over, and let's see if I get some legal action on top of that. So, Moving forward, this week was fairly light, right? We had lower than expected volumes. Yes, JD says all government people do that. I know, and it's just unfortunate because you go after the small guy, right? It's like going after the guy who comes in and steals a candy bar off the shelf and busting them for shoplifting, but they don't go after the guy who's ripping them off, selling the big items to the store. I don't know. It drives me nuts every time. Let's see. Martha Stewart didn't go to prison for insider trading. She did not go to prison for insider trading. She went into prison for lying under oath. So bottom line is insider trade, pay a small fine, lying under oath. You're in court. You're going to go to jail for that one. All right. Let's see. What do we got here? So the calm before the storm. I wanted to put this graphic because we knew it was going to be a lighter week, right? We knew that 4th of July week is generally going to be lighter. You also had, actually, from my perspective, some pretty good volatility. I'll show you what the week looked like here on the charts just so we can go through that, and then we'll go to some more list of questions. So here is your charts of the week. I'll start things off with the major indexes. They were all pretty good. This is a weekly chart. I don't need to go into the percentages, but you can see as the week rolled up, and you can see here, some would call this a spinning top formation or a hanging man formation. Bottom line is not a lot of end of week results with regards to movement, but it closed higher for the week for the NASDAQ. Same thing. Here's your S&P 500. Looks almost identical. More of a hanging man pattern, if you will. That's this little final candle there. You had the Dow, which I don't normally look at. Hanging man as well. Slightly up for the week. Gold also up, but really opening and closing the week right about the same. So not a lot of major change there from Monday morning all the way through Tuesday's morning all the way through Friday's close for GLD. Looking at other ones, we'll look at IWM, which was the decisively negative one for the week. There it is, fairly ugly. But look, it's just in the range. I don't see anything that's scary about IWM. It's just a pullback. I guess the challenge here is that you have IWM selling off as the other three indexes, at least the market indexes, are sitting at all-time highs or making new highs. So a little bit of a concern there, but not really that big of a deal with regards to IWM. What else do we have for the time? We already went through all those, so that's pretty much it. I was going to ask you about the Pelosi's savvy options trade, like right before Nancy Pelosi pushes an EV bill through. My only problem with this one here, Tom, is I don't want this to be a Democrat thing. I don't want this to be a Republican thing. This is a Washington thing. Pelosi, in my mind, got caught. And I'm thinking I might actually do a show on this next week because if you look back at what happened with credit card reform in the early 2000s, 2007 is when the bill was started. I think it was voted on the 11th. Pelosi was the one dragging her feet on this thing, and all of a sudden she was courted by Visa. They made contributions to her campaign. They also, surprisingly, the broker of Paul Pelosi received a phone call, and Visa, they allowed him to go in on the IPO of Visa with a good amount of shares, which is normally reserved for the major financial firms. Of course, this guy now all of a sudden got it. And then all of a sudden the vote comes in, no, we're going to smash down credit card reform. To me, the big problem we have, and I don't know how we fix this. I'm up for suggestions, guys. How do we fix this? The problem is you have a government employee, which is Democrat, Republican, Independent, Libertarian, I don't care which side it's on. Once they get there, they may have good intentions and they get to office, they are now swayed by lobbyists. And when money starts pouring into the opportunity, you think Pelosi's making $1 million a year as being a politician? No, but Paul's making tens of millions of dollars a year trading off of knowledge that he's not supposed to have, which theoretically should be illegal, but somehow they managed to skirt that. So if I'm a politician, I'm here to do what's best for your country, right? I'm here to do what's best for you. You are my constituents. You're Americans, regardless of political affiliation. You should be my main interest, my concern. Yet a bill comes up, like the credit card reform bill or the EV bill or the antitrust lawsuits, where I should do these things for the betterment of our country. The credit card reform one's the one that really ticks me off. That should really be... Credit card companies, I think, are absolutely abusive with regards to fees. If you're not financially responsible, credit card companies will destroy your life. They'll absolutely crush it. You'll never get ahead financially if you are a victim of credit cards because 24, 29% APRs, you'll never get out of debt. That's usurious and should be curtailed, and other fees. Our politicians should have voted for credit card reform, but all of a sudden they got millions of dollars and they vote against it. Not only do they vote against it, but they're rewarded buy those credit card companies for voting against it. To me, that is the problem. And I have no idea how you fix that. It's really, it's frustrating, you know. Obviously, I try to do whatever we can. Unbelievable says everybody has a price. Cheers to that. You know, hey, if CNBC or Fox or Bloomberg, you know, I told myself I'd never go on those programs, but they pay me enough money to come on, I'll go on. There's my price. As long as they let me drink whiskey on the show, just for my show only. I don't want to see, you know, Jim Cramer drinking whiskey or nothing. That's my gimmick. All right. Anyway, I won't go down that rabbit hole. Maybe I'll do a show on it because up until recently, it was pretty much okay for any politician to trade on insider information, yet you and I do it and we go to jail. Really, really bad. Nah, Jade, you're going to sue them. They have more money than you or I do, so if you go to sue them, unless it's a class action lawsuit on the part of America, that would be interesting. I don't know. I'd love to see a law firm that would potentially go after that one, but it's just really frustrating because you want to see things get better here, especially when it's a very identifiable problem like credit card reform. You can make the argument about antitrust, EV bills, things like that. That's arguable points. But the antitrust one, oh my God, unbelievable. Call me Dave Ramsey? Come on, man. There's no way. Here's why I can't stand Dave Ramsey, because he tells everybody that you should not have credit cards, which I think is just a stupid statement. Why should you not want to use other people's money for free? That you should have credit cards and be rewarded for it, by the way. I opened up a brand new credit card, and I'm going to do an unveiling on Twitter probably tomorrow once I get my camera set up. I want to do a special unveiling. I actually got a brand new credit card, which I'm very excited about. It's the first credit card of its type in the world. It just showed up in the mail today, but I want to make a nice, cool little... So I'm going to do a 2001 Space Odyssey reveal of this credit card. But yes, you should be using them for your advantage. Most people are using credit cards to the credit card's advantage, meaning they're getting used. I'd rather use the credit card company. Credit card companies hate me. I change my credit cards about every 11 months. I open up a new one with a great perk, 100,000 bonus points or some travel reward or something like that. 11 months later, I cancel it before I get the new fee. And you're like, oh, but that hurts your credit score. Yeah, 3-4 points. Big deal, right? I'm at 850. I'm not worried about going down to 810 or 820. No worries. All right, let's go. Let's see. Coinbase, we can look at Coinbase. Hello, Alex. Good to have you. Sorry you don't get to join us so regularly. I know you're traveling around for baseball, but cheers. Good to have you with us, man. How do we see the documents they submit before they trade? They're supposed to file all of them, Tom. I'm not exactly sure where they file those, but don't trust any of it. If you believe that Nancy Pelosi says, and she said this, I don't know what he's investing in. Any married people out here, help me with this one. If there's any married person here and you went out without your significant other's knowledge and bought millions of dollars worth of stocks without them knowing in any way, shape, or form, do you think they might be upset, or do you think your relationship would be impacted in any way? I'm pretty sure that I would see a bunch of yeses here. All right. Let's go. I want to get to questions here. So I'm going to start with Les. Les actually sent in a couple of them as I watch your responses to the your marital disputes that would happen if you spent millions of dollars without telling your significant other. Boy, that would be a rough one. Les says, what are the charts about energy, crude oil, and XLE telling you? Okay, let's go and look at those charts. We'll go to XLE, which I've got on this list here. And again, we have this marked up just from the options conversation yesterday. Look at the chart of it. It still looks strong, right? You could make the argument on XLE that over the past, this is a weekly, so let me go to a daily. Okay. You could make the argument literally this week that it broke some key areas, right? I'll put a line right across these lows here, which would be a line in the sand for me. This was a bear trap. It's a very common thing where all of a sudden you feel like it's a head and shoulders pattern here. It breaks down below it and you're like, oh shoot, I'm going short. Boom, it ripped up. And for 2 days since it dropped below that 51.36 mark, roughly 51.36. So, again, that's your head and shoulders pattern that just failed at this point. I still like energy long. I think that you're going to continue to have discussions and issues with OPEC. I think that that's going to bode well for the continuing up move price of oil, at least until they come to some agreement. So technically, I would be a buyer of XLE. Maybe you could be selling puts like we talked about yesterday if you really want to be a little bit more risk averse and go down to, let's say, the 47 mark. Look to be selling some puts there. You wouldn't collect a lot of premium, but you'd be playing that positive move to the upside in oil. Maybe buy even XLE. I'm fine with XLE energy right now. Now, crude oil, we had a huge miss on inventories. That spiked things up. It's been really volatile. And this all stems from what I'll say is Les's second question, which is this one. He says, what about seasonality and OPEC news? I don't look at seasonality. I apologize. You know, if anything, I'm a straight shooter with you guys. I don't really look at seasonality. I don't have too much time for that. I have some futures trader friends that's all they're looking at. So if you look at what's been going on with crude oil over the past week and a half, this is really because of OPEC, right? You see these huge swings up and down. We have the nice breakout to the upside, that yellow zone there, and then all of a sudden comes ripping back down, and you have just lots of chop. Oops, there's your chart. This is because of OPEC, right? OPEC has talked, when COVID hit, OPEC was aggressively cutting production because demand just dropped, right? So they dropped things way down. All of a sudden, OPEC is in a position where demand for oil is starting to surge. It has been surging for some time. And as that surge has been happening, production has stayed the same. They haven't raised production at all to help accommodate that demand. That was the big area of contention this week at those OPEC meetings. If they're not going to agree to oil production increases, then if demand keeps going up, where's the price of oil going to go? It's going to go back up. Now, Russia apparently is trying to intervene. They call it OPEC Plus, which is the OPEC countries plus Russia. You know that at this point, Russia and the United States are really, really good friends. Can you see the dripping sarcasm on the show? We are at odds with Russia for whatever stupid political reason. My guess is Putin's probably going to say, screw America. Let's put extra pressure on them. Keep production where it's at. Maybe even lower production. All right, let's really jack up those prices and to stick it to America during those summer seasons. That just sounds like something that Putin would do. Who knows? All I know is right now, no agreement. That means more volatility. And if I look at the price chart here, it basically tells me that it wants to continue to move up. Why? Look at the uptrend. It's strong. You have the only real weakness you saw was back in March where you had that little bit of a sell-off, made a new low, and then has been powering up ever since. So to me, I think what you're seeing right now in this current action over the past 2 weeks is somewhat similar to what you saw back here in early March of 2021, where it had all of a sudden some big fluctuations, it consolidated, and then started another leg to the upside. So to me, I am bullish on energy, I'm bullish on crude oil, and will remain. I have been bullish for some time on it. Actually, if you guys remember back when we had this huge drop down, remember when Ruben was on the show and I go, if we ever get below $20, buy everything you can of crude oil. You guys might remember that show. Yes, I did buy a bunch, but I sold out after a few days and made a pretty nice gain. It certainly would have been different if I held it all the way up to $74. Okay, and again, I'm going to keep this open to questions here. Scott, just so I know, and this is just, you might never heard me say this, but if you ever have questions directed at me that you want me to get to on the show, just do a couple of question marks before the question so I know that it's going to me, because a lot of times the conversation gets very chatty in here, which is awesome. So like that one you just sent in, do thoughts on, just do question marks before it, just for next time, because I got it. All right, so what do I got? He says, thoughts on natural gas, back end of a head, or is it a new shoulder? All right, let's go to NG. I'm not really seeing much on this one. I mean, obviously, if you go out the daily, you're looking at some big cups here. From the daily, I don't really see any defined head and shoulders patterns. And this is the challenge with this, Scott, is people will sorry if I look like I'm sweating it. For some reason, it got really hot in here. I don't know what's going on. It's warm in this house. It's warm in California. There's an old phrase that says if you torture a chart long enough, it'll tell you anything that you want to hear. And I think this is a great example of that. And I'll show you what I mean. If we look right here, you could make the argument that this is a head and shoulders pattern. Or inverse head and shoulder, right? Here's the left shoulder. Let me see if I can do this. I always have difficulty with remain in drawing mode. You can make the argument that there's your shoulder, your head, and then we'll go to the other shoulder. All right, and there's your right shoulder. So a lot of people would say that that is an inverse head and shoulders pattern. To me, Yes, it is, but I don't like them when they look like that. And the reason is I like when the charts look, when they have more of a horizontal look to it. Meaning that this neckline shouldn't be angled that much, in my opinion. I think it should be more horizontal like that. So this is just something that's still in a downtrend. It's just basically like drawing a downtrend across the... Patrick says I'm high. No, sorry, buddy. Stop doing that stuff years and years and years ago. No worries there. Gotta keep my wits about me with you guys. The whiskey's bad enough. So, one of the things, again, I love about head and shoulders patterns is you can do something like this where it says you take the distance from the neckline, from the head to the neckline, and that should give you a target, which basically says when it breaks, which is here, the natural gas should reach about $4.20. Conveniently, $4.20 after a nice high comment from Patrick. Thanks for that one, buddy. Perfectly timed. Almost like we worked together. Almost like you planned that. So I don't see the head and shoulders there, Scott, but let's look at a different time frame. So let me get out of here. Oh, unfortunately, all these drawings take forever to delete on this. So let's take click by click, and I'll go to a weekly time frame. So on the weekly, you can see it a little bit clearer. You can see kind of the same picture we just drew. Bottom line is right now, I'm not focusing on any head and shoulders pattern. What I am looking at is I'm looking at this high point right here on natural gas. And I think you're in it right now. Right? So this is one of those points right around 380 where you tell yourself one of three things is going to happen. It's going to hit this and just stick there and stall. Usually that's the least common of the three options. Number two, it hits it and then sells off. Right? A little bit of a retracement as it comes into that overhead supply. I would say that's probably option number one. That's probably the most likely outcome in this scenario. The only challenge I have is it's not really a strong level. It's been hit before. So, and then the third outcome is it just rips right through it and keeps on going, which given the momentum, that would probably be my second most probable outcome. So number one most probable outcome as natural gas hits that overhead supply, it sells off. Number two, it rips through it. Number three, it just sticks there and goes sideways. All right, so he says at the 480, go to the 480-minute chart. Now this doesn't make the picture any clearer to me. So no, I mean I don't see anything that jumps off the screen here for me, Scott. So nope, nothing there. All right, and again, guys, I'm gonna do open Q&A. So whatever you have questions for me, send them on in. Happy to go over whatever I can. Let's see, BlockFi credit card. Yep, Tracy, that's what I got. Woohoo! I'm excited. I'm going to go spend a ton of money tonight just so I can get my crypto rewards on that one. Let's see. There were some charts earlier. I see Boss Poopa. I don't know if you're talking Coinbase. Are you talking about my credit card there, boss? The Coinbase card? You want me to check out Coinbase? I actually enjoy the Coinbase chart because we looked at this and that was what they were supposed to be at. You guys might remember I drew this horizontal red line on Coinbase because that's what they were supposed to IPO at. They ended up starting out at 380, so they were $130 above their anticipated offering price, and now they just broke back above it at 253.88. So let me know, boss, if that's what you want me to go over, or you just asking me about my card, my Coinbase card. What other questions you guys have? Patrick says, do a 264-minute chart. I can only do the 183s. That's it, 183s. No, look, a lot of times I actually like those denominations. So if you look at the 480, it's basically just a way to take a bigger subset of data and condense it down. So you look at an hourly, which is a very common, it's a 60-minute, obviously the 120, then you have the 180s, the 240s, and then people jump to the 480s. I generally don't look at the 480s. I'll look at 240s, but my main time frames are going to be daily. The 4 hour, the 1 hour, 15 and 5. That's pretty much my main time frames that I look at. Did you buy puts on space ahead of? No, I didn't. God, I got screwed on the Amazon ones. I thought about doing it, but no, I didn't. SPCE. There you go. And here's space. God, look at the volatility in this thing. No, I did not buy any puts on it. I really was debating it, but no, I'm already probably gonna take a loss on that Amazon one, which I'm gonna hold until Bezos sets foot on ground, whether it's alive or dead. Landis says too is probably gonna happen. You would think the breakout to the upside? Yeah, maybe after a hesitation and pullback. We'll see. All right, let's see. Comcast ready to break through. I'm in it already, so you have a vested interest. All right, I'll try to be objective here. CMCSA. Yes. This looks very similar to what we saw with the oil chart, right? So before I analyze this one, I like this actually. Let's go look at CL. And I want you just to see this similar picture. If you look right here, that looks relatively similar to what we look with Comcast, right? You basically hit the highs, sold off, and now it's making higher lows, but the highs are staying the same. It's an ascending triangle. It's one of the classic patterns out there. CMCSA. This looks exactly the same. It actually looks better to me, honestly, because you have more touches, more points of contact emphasizing that uptrending line. So I actually really like this pattern. It looks good to me. We'll look at a line across the top here. Let me see if I can pull this down just a hair. So the top line is going to be right around, it looks like, call it 59. I know it's a little high, but that's kind of the peak. So if you get a close above 59, you could be off to the races for Comcast. Let's look for a weekly chart here. Oof, well, I say off to the races. This thing's already been doing really, really, really good. So my only skepticism is how much it has moved up. It's from, well, only 100% since the COVID lows. That's not bad compared to what some of the other things are doing. But Tibor, I like it. I like that you're already in it. I would definitely move my stop loss up to below this uptrending line. And the reason for that is if this thing breaks, I think a lot of people are following this. That's why it's holding. The more people that can see it, the more people follow it. It really reminds me of what the self-fulfilling prophecy, right? This is one of those pieces where it just feels like it's stuck above it. It's going to stay above it until it's not. So I would move my stop loss up because this could hit here, just like we talked about with the previous chart, and it could come ripping back down and all of a sudden reverse direction. So as long as we stay flexible and don't get too hung up on your bullish move, remember, it's been a pretty big run here, Tibor. It's been looking pretty darn good. All right, what else do I have? There's a petition on Reddit. Over like 150 million people don't want Jeff to come back. Yeah, well, maybe what do you want to be stuck in space? Lost in space with a $200 billion man. That's nice. All right, Marcus Nin. Thank you, Marcus. I haven't seen the name on the show. I think maybe one time before. If you guys are new, always hit that subscribe button. That always helps me. He is asking about Palantir, PLTR. All right, I've got this on a weekly, so let's go back to the daily. Boy, this one's tough. It depends on how we fragment our decisions or fragment our, Gay. You finally made it, Big Eb. You know why? The shows have only been 35 minutes this week because of you. It's your fault. Anybody who's complaining about the shows being short this week, it's Big Eb's fault. It's all his fault. I'm kidding. All right, so with this Palantir, you look at the long-term picture here since its IPO, and it's not really that great. It looks like a lot of chop. And let me get this piece here. It's basically been just bouncing back and forth for the better part of 2021. Now, what I like to look at, and especially since I'm more of a short-term trader, I'm kind of looking at the short-term perspectives, at least when I say short-term, not necessarily day trading, but swing. So what I would want to do is zoom out a little bit, and I'm going to analyze it from here. Because that's what I'm interested in, right? I don't have anything above these highs that established at the end of June, and I've got these lows that go back into May. So I have this beautiful uptrend. It took it from about 18 bucks up to almost 28, so great move there. It's in a nice pullback here, so does this mean that this is going to come all the way back down and continue that further trajectory south? That's a tough question. Some people love to look at things like Fibonacci. If you look at Fibonacci, you did a 50% retracement exactly before it bounced. And the reason I put the fibs on here is if I look across and I go from the move that happened from May 11th all the way up to the peak that ended on the 28th of June, I don't see any really exciting demand zones. I see nothing here in that entire space that says, man, that's institutional buying. I don't see any footprints or anything that clues me into big money pushing it and potentially stalling it out. So it's hard to call a demand zone here as to where it's going to bounce because I just don't see anything. That said, maybe add on fibs, right? There are traders who love them. I am a fan of Fibonacci, and you notice it came literally right down to the 50% and this bounce from there. So that said, I would probably, if I had to pick a direction right now, Marcus, I would say I am more bullish on this one simply because I feel it's a pullback after a pretty extended rally. You usually get a nice little pullback, and then it continues on to the upside. Now, let me get rid of these fibs. And actually, if you want to know more about fibs, Jeff Manson did a show on this. I think he did it on this program back last year. It was a while back. Let's go to the weekly. So, you know, do you see this thing hitting 45 is probably the next question coming up. No, not anytime soon. All right, I think it could take it could get there for sure. Anything's possible. You know, your first objective is you got to clear this 2750 mark before you start seeing real big upside move. But it's at 23.29 right now. And it's that high point that we've seen 2 weeks ago was at 27.50. So you got a $4 move. That's roughly what, 8%, 8.5% move up. Great, plenty of opportunity there. Oh, thanks, Big Eb, and thanks, Marcus. I appreciate that. It's all about learning, isn't it? Learning and perfecting your craft and making it better and better and better is the goal. So there you go, Marcus. Hopefully that helped a little bit. It's a tough one because I don't see any like overwhelming strength of trend based off of what the history of it has been. It's been really erratic. At least for me, since May, it feels like it now has some sense of direction, has some trend. There is some strength to it. Granted, we got a pretty aggressive pullback of 50%, but I'll take something that moves up 100% and then has a 50% retracement and keeps doing that because that's going to make you a lot of money. All right. Let's go. Actually, no. You wouldn't do 100 cut in half. Then you'd actually be losing money. Oh, the strategies of fractions and breaking things down. As I wait for more questions, I will go here to a question from Mike, which was sent in yesterday or today. It says, I saw someone put an alert on a radar screen, and when the price was tripped, you would get a notification. Do you know how to do it? The benefit of this was the chart did not have to be active at the time of the alert. It was sufficient that the radar screen had the alert. I believe, Mike, that if you put an alert on TradeStation on a chart and the chart is not open, it still will alert you. I believe that because it's in the easy language, not necessarily on the chart. That said, to your question, let's say, for example, I wanted to be alerted every time. All right, so this is one of my favorite little things to use. It's called Bollinger %B. So let's say I want to be alerted anytime something's over 100% or anytime something is below 0, meaning it's extremely overbought or extremely oversold. And you can see it's already alerting me. This is how it did it. It just highlighted here and put a little mark next to it. All right, so it has the alert. But if you want to alert yourself on anything here, you would simply right mouse click and you go to alerts, right? And say enable once on alert. You can do once per bar continuously. If you do continuously, it'll drive you nuts. Don't do continuously. Just use enable alert once. It clicked. So now it has all these little dots. You can see these little tiny blue dots here. That means that there's an alert on this thing. Now, what's the alert parameters, right? How do you configure to tell you what you want to hear? Well, if you right mouse click on the header again and go to Format Bollinger B or Bollinger %B, there's a tab that says Alerts, right? So here's your alert settings. I have it set to alert once. Great. If you go to Inputs, these are the parameters. It says here High Alert is 100, Low Alert is 0. You can change these to whatever you want. So if you want something that's extremely overbought, you can say make it 120 or make it -10. Right, so now you're looking for, these are even more extreme. That's saying they're way outside of Bollinger Bands. And notice now, this one up here is not alerting me. The way it alerts you is it'll put a little bar on the side of your radar screener here. And so let me change this again so you can see it. It'll pop back up if I make this 100. And I'm going to make this back to 0, just so I keep my programs the way I want them. Okay, and it should have alert, but it's because it's not trading, so it's not updating here. It'll put a little yellow bar on the right-hand side here, and depending on how you configure your settings, you can have it pop up a little alert that shows up on the screen, and it'll tell you that that condition has been met. But you have to do that in the settings panel for the alerts. There you go. That was easy. About to let's see, what do we got here for Marcus? I'm about too soon, about 24 for no real reason. Then it dipped. I went, oh boy. Oh, okay. You got to be careful, Marcus, because I appreciate you telling me that because you know I'm going to comment on it. It's if you bought something for no reason, you're like, oh, I'll buy it because you heard about it. It's exciting. Somebody told you to buy it. Whatever the case may be. If you buy something and starts to go against you, you're already making a mistake by not having a point to get out, right? You should always have a place to get out. You added to a losing position. And who knows if Palantir is going to do well or not. You hope it does, but your hope has no bearing on these markets whatsoever. Trust me, I've hoped and prayed to whatever God you want to give me that my stocks would go up sometimes, and they continue to go against me. So you always want to have a stop loss in place. Only time you should be adding to a position is if it's moving in your favor. Now you're stuck in a position where you're just a buy and hold guy, and you're stuck in this one. And the problem I have with that is simply this. If you're in a losing trade and things are railing against you, it's opportunity cost. I'd rather get out, lick my wounds, take a small loss, but be able to take that capital, and if I find something great and I can't buy it or short it because all my money's tied up in bad losing trades, I'm the idiot. That's the way I view it for myself. Not sounding condescending to you guys, but that's how I talk to myself. Like, you idiot, Merlin. There's a great trade setup over here, but you have money tied up in a losing trade? That's why I don't take them anymore. I mean, I'll have losing trades, but I have points where I just say enough's enough, I'm out. So don't hold on to that one don't hold on to that opinion too long because it can destroy you. Continuing how China's acting, how might EEM look? I don't know about if I go EEM or go FXI. I probably would look at FXI, but let's look at both. You got EEM. Here's your emerging markets. Funny, we had this drawn out yesterday, and I was like, yeah, I probably wouldn't take it. Would have been a nice one because you had a big jump up today. If you were selling puts, would have been good for your premium and decay. So EEM, again, I'm not excited about this pattern whatsoever. I would be looking more from the China ETF, your FXI, and this looks weaker than you saw with EEM, right? Because it's been making lower lows. The biggest challenge I have, and I actually have this on my, I had this on my ETF watch list, but I removed it. If you look at this chart, do you notice all the gaps? I mean, this thing gaps all over the place. It's really risky. I mean, volume is fine, but the gaps were just too much for me to handle. So I wouldn't particularly look at FXI. However, if you're looking for the strength of the Chinese large cap stocks, you can clearly see it's been getting weaker and weaker and weaker. Now, we could point our fingers at a variety of different things which may be causing that, but bottom line is if I'm looking for something to short, FXI becomes a great candidate. If I'm looking for something to go long, U.S. equity markets are the place to be. And this is what's happening. Capital is being pulled out of the weak markets and being put into the strong ones. Right now, there's not much stronger than the U.S. equity markets across the board. Joy. New to your live show, what do you think about Chinese stocks like Baba? I have a thing against Chinese stocks for one reason. I believe that we cannot trust the data, the accounting rules that come from Chinese companies. I was reading some articles a couple years ago that were talking about, I think actually President Trump was big on this, where to do an IPO or to go public on the U.S. stock market exchanges, pretty much every country around the world had to adhere to very strict accounting rules. And for some reason, Chinese stocks didn't have to adhere to that standard. And that makes me very wary. We already have trust factors with China as a country. I know for the Chinese people watching this program right now, you're probably hating me. It's just the way that we're viewing them based off disclosure and things that have happened in the past, right? The Chinese government controls a lot of the information. So I don't know if I can trust the financials coming out of Alibaba, what they say. So I generally don't trade Chinese companies. Not that I'll never, but generally I don't. From a price perspective, what do I think about Alibaba? Short it. Look at what it's done. This has been some of the biggest bull market rallies we've ever seen in the history of financial markets. And Alibaba, since October, has just been like the Titanic, just dying, going down. You hit a pretty interesting point with Alibaba, which was a round number psychology of $200. Right, it fell aggressively to 200, and this was a demand zone, which is kind of a nice little double whammy. So yeah, could it bounce back up here? Sure, but I do feel like if you look at the intermediate term trend, which is from October through now, it's getting weaker and weaker and weaker. So I would probably not look to buy Alibaba, and the reason for that is a lot of people look at this price chart and say, man, Merlin, this thing was trading at $319 in October. It's $205. It's down 33%. It's going to go back up. It's a great company. It might be a great company. This might be one of the best companies in the world. I'm almost being sarcastic, but I'm just saying hypothetically, could be. Price is what's important. I'm not trading Alibaba because I love the company. I'm trading Alibaba because the price chart is telling me it's going in a direction that I have a higher probability of making money on, period. Let's be honest. Is anybody here buying a company because you're like, this is the greatest company, it's going to do the greatest things for the world? Or are you buying it because I think it's going to go from $10 to $20 and I want to make money? I'm in the camp of, I don't care what they do. Yes, I like certain companies out there, but I'm not buying a stock because I have any emotional attachment to it. I'm buying it because I feel, through whatever analysis I'm doing, that it's going this way or that way. If you like Alibaba at 300, you'll love it at 250, and you'll really love it at 205. All right, Big Eb, because he wants me to go long, and so he asked me questions right near the end of the show. It appears the reopening trade is no longer attractive. I'm thinking long on QQQ. Tech again, thoughts? Given the recent moves with the antitrust against the big tech, especially Facebook, yes, it would appear that going long would be the way to go. We can go look at the QQQs here. And, I mean, the price chart's saying it. Just my only nervousness here, Big Eb, is that we are really extended, right? I mean, it's so high right now. Yes, it can go much, much, much higher. So the question is, do you buy the QQQ and expose yourself to all that risk, or do you sell puts, right? If you sell puts and say, let's at 340, right? Maybe you go out and you sell the 340s. Maybe you do it on a weekly or a monthly basis and just collect premium. You're not exposing yourself to as much risk as you would if you were long straight QQQ. Because could we get a moment? It just feels to me like we're setting ourselves up for another Black Swan event. I honestly feel like that's what's going to happen, because I was reading headlines today. It seems like every analyst is throwing caution to the wind and saying, buy this, buy that, you got to buy this, you got to buy that. And to me, it's like, when I see that, when the pendulum swifts so far from, oh, the sky is falling, you're going to hell in a handbasket, to nothing could go wrong with the market, which is what most people are now seeming to say. The Fed's going to back it. We've got great earnings. You've got fundamentals getting better. As soon as that happens, it just seems like that's when that Black Swan event hits and all of a sudden things come ripping. So I might be a little apprehensive about just going straight long QQQs. Maybe I look to sell puts and give myself a 5% drop to buy in and still be an owner of QQQ, but 5% lower or whatever price point you determine. That's probably how I would go about it. After what did Jack Ma, there is no trust at all. Yeah, exactly. Poor Jack Ma. Oh, see, even my ice cube is disappearing quickly. All right. What did I have to say? Oh, so I don't think I put anything on the screen over here. I actually took a screenshot of it. Is this what's happening next week? Yeah, I didn't update this. For next week, with regards to earnings announcements and economic data, there really isn't anything exciting happening on Monday, right? There's nothing that you should be concerned about, I don't think, on Monday. On the earnings front, you've got nothing. On the economic front, with regards to, global news or macro driving events, there are some things. I'll give you one. You have the 10-year bond auction, which I think the emphasis on that auction has dropped a little bit because it's been rather positive lately. For the UK, you have meeting minutes, you have financial stability review, but that's pretty much it. There's not much coming out for the US, and it's a rather boring day out there on the fundamental perspective. Now, it really all starts on Tuesday. Tuesday is, I called this the calm before the storm, which is kind of interesting because we had quite a good amount of volatility this week. I think next week you're going to see quite a bit more. I'm actually pretty excited for next week. I think you're going to get some very big waves and all of a sudden a bunch of new talk tracks for what may be a catalyst for the market or something that could bring this market down. And that is obviously the earnings that's happening. You have, again, almost every big bank is reporting earnings next week. And let's take a peek real quick at XLF, our financials ETF. It's starting to show a little weakness. Yes, today was a nice up move to the tune of 3%, but you notice that it's hesitating. It hasn't really started to rally back up. It feels like it's just a little consolidation here. That will be a very exciting moment. Tuesday morning will be a fun day because that's when most of them hit, but we'll talk about that on Monday's show. And then next week you have quite a bit of economic announcements with CPI, PPI, and retail sales numbers happening next week. So it's going to be very, very exciting trading activity next week. Let's see. Merlin saw online that China is probably going to have their first GDP bigger than the U.S. this calendar year. Any thoughts? No, I mean, it's no surprise. I mean, yes, they've been down for a little bit because of COVID and factory shutdowns, but historically, China is well above the U.S. with regards to GDP. So That doesn't mean much to me at all. I mean, I remember a few years back, we were looking at GDP of 4% for the U.S., and I think China was like at 10 or 11. I've just kind of my whole life I've kind of known that that's just the way it is. Oh, Les Gold, thank you so much, sir. And thanks for always being first to the show. I think you have some competition now. I see some people competing with you to be the first to type in a chat. But thank you for the contribution. I definitely appreciate it. It will go towards my fund this evening as I will be going out and enjoying this wonderful Southern California weather. Yes, Landis, CPI, PPI are going to be monstrous next week, guys. I think Wednesday, Thursday are going to be the big, crazy, volatile trading days. What else do I have? Believable. What do you think about HUT, Bitcoin miner out of Canada? I don't know much about them, I'll be honest. I don't follow anything to do with them, but I can look at the price chart. That's all I can really do. It actually is looking pretty good. It's looking pretty good simply from the perspective it finally broke this downtrend that started back in, let's call it February, right? It's been a pretty aggressive one. But keep in mind, always keep this in the back of your mind, that look where it was a year ago. A year ago, this thing was trading at, give me some numbers, Merlin, at 88 cents, right? So don't get too hung up with, it's trading at $5, it could go to 13, right? We tend to blind ourselves with what it could do from the positive perspective. So what I mean by that is this. You look at this price chart, and what a lot of people do is like, wow, it hit this high on the 22nd of February of $13, and it's only at $4.80 right now. If it gets back up to 13, I'm rich, or I'm going to make a ton of money. Well, keep in mind, it was 88 cents a year ago. Now, granted, Bitcoin has taken off significantly, and if you look when Bitcoin took off, it was in August, which that means that the miners are going to be making more money. So, of course, HUT probably doing really well as those mining rewards are getting higher and higher, and then all of a sudden it started to fall apart. So this is going to be somewhat tied to the price of Bitcoin. If Bitcoin does continue to slide, as a lot of analysts are expecting, then HUT is probably going to slide as well. The higher the price of Bitcoin, the more money HUT will be making. So you keep an eye on that one. To me, that's, I don't know. I'm not that confident on this one. What's nice about your HUT is the volume has been really good over the past month, which is very good. You want to have a higher liquidity. And when I say really good, it's just averaging 1.7. Whereas if you go back to March and May, it was averaging about 264,000. It's averaging... 264,000, 700,000, excuse me. So less than a million. All right, let's see. Oh, I thank you, Mikias. I love you too. Merlin, doesn't GDP percentage-wise, GDP dollar overall, that hasn't happened yet? You know what? That's a good question. So GDP per capita, GDP absolute dollar amount wise, I remember there was I haven't followed that data that close, but I remember there was a period where there was talk that China was actually bigger than the US for a brief moment, and then it's back to the US being bigger. But I'll have to look at that data. I can't give you any definitive action there, Pepe. Not 100% sure. I'm excited for bank earnings as well. I think it will be good to see not only what the stance is, how their earnings are performing, get their views on the markets going forward, but it'll finally give the markets some new juice. All right, what have we had recently that's really driven this market? Analysts and expectations. Now we'll have some numbers, some actual earnings stuff that can drive these markets, plus some really good fundamentals. All right, that's going to do it for me. I got to get out of here before I make an hour show. I hope you guys enjoyed it. I will try to get other guests on the program. I know Katut says have David Warner back on. Sure, love having David Warner back on the program. I'm going to have Corey Lane on Tuesday. I believe Wednesday I'm not going to do a show. I'm not 100% sure right now. I'll let you know Monday. But I think on Wednesday I got to take the day off to take care of some business. As you guys know, life happens. I can't do this all the time. Big Eb says they lie on GDP, whether percent or total. All of it's a lie. It's just how big is the lie. CPI, PPI, ADX, not ADX, you talk about any manufacturing data, the Philly Fed all that stuff. Who knows? I don't know whether I trust that crap at all. It is what it is, and unfortunately there's, you see what's happening with Pelosi right now, but again, I'm sure that's happening on the Republican side, candidates and libertarians. It's just taking advantage of a system, and these numbers can be used, when I say numbers, GDP, CPI, PPI, to paint a rosier picture for us, the consumers, about how the market's doing. Last thing they want to do is have Americans panic. And if they do have us panic, they'll be positioning themselves to capitalize on that panic. So if there is a panic, like some people have been making the conspiracy theory that the politicians or our governments created COVID virus to get us all freaked out and see how much they could get us to do and how they could control us. Who knows if that's a true conspiracy theory or not. It's just one of the hypotheses out there. All I can trust is my bank account and my actions. All right, guys, that's going to do it for me. Hope you have a fantastic weekend. Be safe. It's hard to believe it's already Friday, but cheers to everybody out there. I will see you guys on Monday. If you have comments, questions, feedback, anything you want me to discuss on shows, send it on in at TraderMerlin@gmail.com. Name is on the screen. So for those of you who listen to the podcast, I would encourage you to check out the video on YouTube because you can see some nice chart analysis and join some discussion. That said, everybody, have a great one. I will see you all on Monday. Take care.